Hi, my name's Kieran Howard from the PIP Management Committee. Thank you for your talk, very informative. Okay, my question, what do you think of the opinion expressed by Martin Field in his book, The Great Multinational Tax RORT, How We're All Being Robbed, that corporate tax is a social justice issue dealing with the very cohesiveness of society, that the tax minimisation strategies of multinational corporations, in particular transfer pricing, quote, has become the global monster that threatens the social fabric of the entire world?
Joe actually gave me the book, and I read it. I thought that it was brilliant in terms of it was a really good way to sell a lot of books. It now and again intersected with the real world as well, but only now and again, in that it's really easy to sensationalize things, and it's really easy to exaggerate outlying cases and to pretend that those are the norm. And if anything, my critique of that book would be that many of the things that he presented as day-to-day normal practice were fringe events that in a lot of cases people went to jail for or companies got huge fines for. At the beginning of our talk, I talked about the difference between being illegal and if you murder somebody, expect to go to jail. If you rob somebody, expect to go to jail. If you cheat on your taxes, then you should expect to go to jail. Versus things that are allowed in law. Now, how many of you pay more tax than the government asks you for? And why would we expect anybody, any company, to pay more tax than the law asks them to? So my point is that if we want to get rid of problems with, or perceived problems with tax avoidance, the answer is that we need to have more intelligent, I was going to say more intelligent politicians, but I guess I'm on a bit of a hiding to nowhere there. We need to have better written laws that make things that we're not comfortable with illegal. So long as people have the ability to follow the law, that's what they're going to do. So transfer pricing is a problem. But as Matt has explained, we have tremendously tight laws against doing that kind of thing. So I don't see it as a huge problem, and it's certainly not the end of our civilization.
Yeah, g'day, Brian Concannon. Yeah, I'm interested in anything that increases the standard of living and gets the economy booming again. Malcolm Turnbull's tax cuts to big business, 65 billion present there. If he gave that money in tax cuts to taxpayers and welfare recipients, that would have increased spending, which would have increased the economy, employment. Anything you can tell me on that, how it would have been a lot better than 65 bill to big business? And my second question is the bankers, they've got to spoil the balls, basically. Jay Weatherill, Australia's best premier, like he wants to tax the bankers. New South Wales, as if, it just won't happen here, but do you think it could? And no, if Australia nationalised the banks, like they're making tremendous profits, these guys. Like if the government said, like, I've had enough of your corruption and bullshit, we're going to nationalise you. The economy will just go out of control. Like the standard of living. What are your views on that?
First up, I'm going to take the easy question and handle the second hard one to Matt. I would prefer that if the government were to change in a major way, the spending profile, the first thing that the government should get onto is let's reduce the government debt. Let's get that down from 40% of the GDP down to 20%, back where it was in the early 2000s. That gives us a lot more breathing room for a whole bunch of other things. Once we've done that, then we can start to look at other ways of spending the money. In terms of taxing banks is higher. I think we'll just say that banks currently pay the tax that they're obliged to under law. And if the government wants them to pay more tax, then it can change the laws. And if we like that, we'll vote for those politicians. If we don't like it, we vote for somebody else.
And one other comment, obviously, we had deregulation of the banking sector in the early 80s. And also under Menzies and a lot of different things, and it actually helped the economy, having free banks rather than having them nationalised.
Two very quick questions. One, Labour wants to make some changes for trusts. Do you anticipate that people will rearrange their affairs to minimise the tax? And second question is, government wants to tax offshore online purchases for capital gains tax, and it's going to be difficult. Wouldn't it be easier if you just tax the equivalent of the CGT on online payments providers, people like PayPal and Visa, and just get them to collect the 10%? Wouldn't it be more tax efficient?
It's a decent question. It's a policy design thing. So I don't think it's capital gains tax that they're seeking, but yes, GST. So they're seeking to, and this was a retail thing. So as a design thing, but basically the idea of putting in the threshold originally was that to collect GST on goods that are less than $750, the cost of administration and collection far exceeded the GST they collected. But now it's a policy decision that they've decided that they might want to go and tax everything. And it's that sort of hang the cost. I think, there's been certain retailers who've pushed very hard for this. What was your first question again, sorry?
The first question is...
the trusts.
Yeah.
Yes. So in relation to trusts, we've already seen articles in the Fin Review about what people might do in relation to the proposals that have been released by Bill Shorten. I think some of the stuff that's, again, these are my personal views, are a little bit dangerous for Mr Shorten because the Labor Party did have a history of having the Great Divide, which assisted Bob Menzies for many decades to remain as Prime Minister. And a lot of the discussion that was put in the speech of Bill Shorten the other day was around equalising income, equalising wealth. And we need to be a little bit careful about some of those debates because it could stymie progress.
But the question is, if Labour got to power, would people rearrange their affairs?
Well, we'll have to see what the law is at the time, but you'd expect that people aren't going to sit and just cop it. The other comment I'd make is that many years ago they tried to bring in a taxation on trusts called entity taxation. So basically to tax trusts as if they were companies, and that became an absolute disaster, and so they decided to abandon the whole thing.
If we accept Piketty's proposition that poorer people spend more money and therefore money at the bottom of the tree, which I think another questioner alluded to, that it's more efficient to give money to people at the bottom of the tree because they spend more and have a bigger stimulatory effect, then the inefficiency of various taxes must be considered. I wanted to ask two questions. First of all, it seems to me that the discount on capital gains tax plus negative gearing has supercharged property investment to the point that we now have a huge increase in private debt, and we've broken the nexus between hard work and making money because there's this whole industry building bigger houses than we need and putting money into that, which means it doesn't go somewhere else. So we're distorting our whole economy at one level. At another level, it's a second question really, if you've got, say, your figures on 65%, I think, of corporate tax, it costs so much to collect it. It's because of the complexity. I mean, well-paid chaps like yourself probably, that industry is a very lucrative industry, and of course it's got lots of lawyers and accountants and high-paid people basically working out ways not to pay tax. Isn't it much better to simply say, well, look, the tax is even for corporations and everybody else, and if you make X dollars in sales, then you can deduct a limited number of things, but after that, that's your profit, and you pay a certain amount of that, and whatever transfer pricing you do is irrelevant. I mean, you keep it really simple. That way, you're going to increase the percentage of tax that's collected as a percentage of the, lessen the collection costs, and thus make the tax more effective in terms of revenue, and thus better for us. So why isn't there a big trend towards simplifying the tax? First question. And why isn't there, with taxes that are really destroying the whole economy, from the work ethic to the affordability of housing to the kids getting houses to whatever? I mean, surely there must be a better push to reform this.
I'll start, Matt, and then you can pull me out of trouble when I fall in the swamp. Looking at Mr. Piketty, about the fifth or sixth week of Economics 101, you come across a concept called the marginal propensity to consume, which basically says if you got no money, you got to spend a lot more of your existing money on groceries and clothes and essentials. So you're absolutely right. And I don't think there's anybody, whether they're from a classic economics background or behavioral economics or any other school of thought, that would dispute that. So it's not necessarily an efficiency issue, it's more of a power issue. So I think Mr. Piketty's book was incredibly eye-opening, and it definitely highlights the deficiencies in our current tax system, in that our current tax system is almost all based on income, whether that comes from wages or capital growth or what else. It doesn't really have anything to do with taxes on assets. And if you follow the ideas of Mr. Piketty through, then I think that's kind of the logical conclusion. We're a long, long, long ways away from having any kind of a political agreement on that. So I think it's something that's worth fighting for, something that should be on the political agenda, but doesn't even reach the radar at the moment. Your second question, help me out, Matt. Oh, yeah, look, I teach a course at UTS for the Masters of Property Development program called Market and Risk Analysis. I spend a lot of time every year looking at property markets around the world. If the Australian tax system was the culprit for our current property market problems, how do you explain what's going on in Auckland, Seattle, Vancouver, Toronto, London, Paris? All of those property markets are at least as bent out of shape as ours are. It's a lot more than the tax system that's stuffing up our property markets. So, well, I'll just leave it at that. It's even more than that.
Yeah, but you did raise a good point. Yeah, good point. First of all, in relation to the CGT discount versus negative gearing, one of the things I didn't mention on the graph that I put up about the efficiency of taxation is the fact that part of that cost relates to the mobility of capital. And so stamp duty in particular is a very big cost. So people are making bigger and bigger houses because they don't want to release the capital out of their house. They might need a smaller house, but they can't really afford to go and buy the smaller house because they've got to sell the current house. The transaction costs are too high. And so you basically have a lot of stranded capital. And that stranded capital could be used better in the economy. So you're right. Recently, we sponsored an infrastructure summit, and one of the interesting things that was being discussed was the future of infrastructure and the use of automated vehicles, and the fact that this could result in many houses having no garage, and the average within a certain ring of the city, the average cost of a parking space on a house is about $100,000. And if we were to release $100,000 from each of these houses and reinvest that within the economy, how good would that be for the economy? So anyway, that.
A lot of people park on the road, though.
Pardon?
A lot of people park on the road
Yeah.
because their garage is full of shit. All that
Anyway,
stuff they built.
Simplifying. We've been trying to simplify the Tax Act since 1997. We've been trying to simplify it. We've now got two tax acts. The simplification process sort of got stuck, and so rather than having one act, we have two. So the 36 Act and the 97 Act. So we tried to simplify. A couple of years ago, they abolished hundreds of provisions that were never used. So it's the abolition of the Inoperative Provisions Act. And so they basically just really slimmed down the Tax Act, because a lot of the laws in the Tax Act are there for particular circumstances, and they're brought in for particular scenarios, and often those scenarios no longer existed, so they could just abolish them. So in terms of simplification, I'm all for simplification. In fact, I've got a lot of my ex-colleagues are very senior people within the tax office in different places, and I know that it is their personal views that they should simplify the Tax Act. But, there's a lot of academic debate about this. Our Tax Act is not, it's sort of a mismatch between principle-based drafting and non-principle-based drafting. Principle-based drafting is basically you set a high-level principle, and then you let the ATO and different people in the courts work out how that principle should apply, versus the very detailed approach that the Tax Act generally takes. For example, there's going to be a debate shortly about whether we should keep the CGT provisions in the way they are. We've basically got these CGT provisions. You apply these CGT provisions in a certain way. We've got tax consolidation rules that started out as principle-based drafting and ended up in a whole mismatch of stuff because people kept on coming back saying, what about this, what about that, what about this, what about that? And we ended up with a very complicated set of rules. And, we are all for simplification because it helps everybody.
So a point of clarification to start with. The graphs you said at the beginning about percentages, corporate versus everything else, were they actuals or were they percentage, like modelling of the percentages? So, because that's, and are they different because of all the stuff you said later?
This set of information, this particular graph, the information was sourced from Oxford Economics, which is from Oxford University in the UK. This is best available information that I'm aware of, and I think I did this graph in March. So it is up to date as we can get.
But based on income to the government from those sources, or on the modelling of the percentages of and then the percentages that you mentioned later on about how much Australia pays in taxes, how different are they compared to that?
I think this is a proportion of the total revenue. So these are the dollars. These are the dollars, and then the other ones are tax rates. So
are they similar? But you get that there must be a model that says if we do this, we should get that out of the companies, given that we have this filter called people doing bad things. It's like are they similar or not? Proposed versus actual. That's
yeah.
Just I've got another question. No, I've got a very separate question. So to
Actual 1990 to 2015 is actual.
Yeah.
2015 to 2025 is.
So they're similar. Are they similar though? The two, the proposed versus actual.
Yes.
Okay. So my other question is very different, which is that they're proposed to have turned the Western Sydney Airport, Badgerys Creek Airport, into an aerotropolis and a free economic zone, which would allow a tax-free zone in space within Sydney. All right. So my question there is that a good thing or a bad thing, and what complexity would that create?
I'm not necessarily here to debate, I suppose, policy, because that's for the politicians. But in terms of the tax-free zone, I think Gina Reinhardt suggested we should have one around Darwin. And I can see a huge advantage in having something like that because we're so much closer to Asia. And a lot of my clients actually say to me, if we actually, they situate themselves in Singapore, we had a special economic zone in Darwin, that actually moved their organisations to Darwin.
So, but when you say advantage, is that like more people having jobs?
Yes.
Sorry, okay.
Yeah. More people having jobs because like a number of years ago I lobbied for what we call the investor manager regime, and the whole idea around that was fund managers had a reticence to actually set up in Australia because the moment they set up here they'd have a permanent establishment, have to pay tax, have a lot of administration. And we then surveyed all around the world, Hong Kong, Paris, London, New York. They all had similar regimes that actually said that these guys, if they set up their operations in that city, didn't have a permanent establishment. And the idea was that if we had a similar regime, they would then situate part of their operations in Australia, employ Australians, they pay tax, they spend money in our economy, which results in more tax. So in terms of the Aerotropolis, I'm not quite sure. I'm not quite familiar with the...
2 days.
Okay, I'm not familiar with the proposal, but I can sort of understand where they're trying to get to, because obviously the new airport's being constructed by the federal government, and they need to encourage activity out there, because it is a long way out there, particularly if they're not planning to put a train in anytime soon.
I noticed that the share of taxation paid in China is very low. Is that because the nationalised industries produce such a surplus to pay into the government that they don't need to tax people so much?
It's an excellent question, and I've been using these figures for 10 years or so, and the more that I've dug into them, the more that I realize that Chinese economic reporting, particularly through until about 10 years ago, was on a very different basis to what we did. They've made some efforts to try and standardize with the rest of the world, and people like Oxford Economics do their best to try and make like to like, but there's lots and lots of questions that I don't understand about the way that China's report things. So, for example, they're showing 5% of the GDP back in the early 90s. At that time, the average Chinese person produced about $200 worth of value into the GDP. Today, they're doing about $18,000 worth. So, in those days, you were saying that people had practically no income, but we didn't need any taxes. Now we're saying they've got middle class incomes by a lot of the world standards, and we're kind of getting to world-class shares of the economy going into the tax system. Doesn't make a lot of sense to me either. I don't know what the answer is.
I think you asserted that you thought the GST was a more effective way of raising tax, but I think the topic of tonight's talk was how does the taxation system benefit the rich, and therefore I think GST affects poorer people much more than it affects rich people. If you've got to buy, I don't know, a fridge or something, and you've got to pay, 10 or 11%, and that's probably at least $100 or more. That's much more of an impost on a poor person than it is on a wealthy person. So I'm challenging your assertion, and perhaps I missed something there, but I can remember when the GST was introduced, there was a huge amount of opposition to it. And I'm also somewhat sceptical that it's actually got that much support to increase it, as you also asserted. So, yeah.
Your point is fair in that the topic of tonight had to do more with fairness. The slide that we put up that talked about the effectiveness of different tax methodologies had to do with efficiency. Efficiency and fairness aren't the same thing. The classic answer to this is if you're going to have a high rate of sales tax or GST or value-added tax, you need to compensate people at the bottom end of your society in a different mechanism. So it's a political question that says, if you're going to introduce this type of tax, the corollary of that is you need to do something to compensate the bottom end of your society. So the fairness issue is addressed through that compensation mechanism. The efficiency is just a natural characteristic of the way that GST works.
And just quickly, we came out with a Mythbusters series to try and mythbust some of the tax issues that were being very topical. And in terms of that 15% tax rate, we were saying we would overcompensate the lower end. So within our modelling, we overcompensated. We actually gave more income based on the modelling through the tax system, the redistribution system, through welfare to the lower socio-demographics to compensate them for the higher GST rate. And how it did the same thing when the GST came in.
How do you think the Commonwealth Bank's going to go with their 53,000 breaches of the money laundering?
I'll take that as a comment.
A comment and a question. I want to thank you guys for a wonderful presentation. I feel very privileged, as I'm sure we all do, to have got this very informative insider view. It's almost like getting a consultancy with Ernst & Young, which would normally have a market value of $5,000 but for the $5 we flung into the basket that came out earlier. Deloitte's probably 7,500 in that case. But my question is fairly straightforward. It picks up on your point about simplification. A lot of what we've been hearing is complex. I've found it hard to take in, as I'm sure many other people have. And I'm just wondering if the whole Taxation Act was rewritten, forget wealth tax for the moment, assets taxes, that's a different basket. But if the income tax was simply a one-line rule that all income received by individuals or corporations is subject to tax without exception according to the following schedule, which might be a sliding scale, or it might even be a flat rate of 30% on all income, irrespective of whether it's earned by individuals above a certain level or corporations. Would that help to overcome many of the biases and RORTs that you've helped us to understand?
Yeah, quite possibly, but trying to get that across politically would be really, really difficult. I think there's one party that's going for a flat tax rate, and I think that's One Nation. I'm not sure about the Greens. I think the Greens might have a similar policy, but it's just political. Like we had the previous question was around compensation for the poor, and obviously necessarily, in fact, a very large proportion of the population pay no tax, and and the top end pays a significant amount of tax, and so you're basically going to be dragging down the rich people in terms of the amount of tax they're paying and possibly lifting up the bottom if you're trying to maintain the same amount of revenue, if you're going to have a flat sort of system. So that's one thing you need to be a little bit careful about. I think it's really hard to get across politically. But simplification, absolutely. I've been pushing for simplification. When I look at different jurisdictions around the world with much simpler tax systems than ours, interestingly, they're not necessarily become that much simpler. So, for example, Hong Kong has a tax act that's very skinny. It's a source-based jurisdiction. We're a worldwide taxing organisation. I've got 4 volumes of tax legislation on my desk, and that's just the legislation. And there's thousands and thousands of pages of case law, common law, that I need to be across. There's thousands and thousands of pages of tax rulings that I need to be across. And so it's interesting, like Singapore, again, similar to Hong Kong, often when you need to do a deal in those jurisdictions, you need to go down and have a chat to the Revenue Authority because there's not something written down as to how something needs to be done. So certainty in relation to what's written often, and there's a big debate at the moment around certainty, and people want certainty around particular things. I put up the stapled stuff. And so that's one of the arguments, that we want to have certainty in relation to how these things should be taxed. So yeah, it's a difficult debate. It's very political.
I'm wanting to extend the vein of questioning that Mark was on, and so it's highly speculative, but with the clear indications of us entering a new era with artificial intelligence and the huge labour implications of that, I'm thinking more and more that universal basic wage or living wage may actually be an economic necessity. What, with your detail and big picture, can you say whether it's what is the neoliberal argument for a universal living wage, or what's going to be the huge economic fallout if you have a whole lot of people that cannot work, cannot get paid, who suddenly have no spending capacity? if you could answer that somehow.
You've wandered way outside of our area of
Oh, well,
expertise, but we can make up stuff with the best of them.
It's speculative.
Okay,
Because this may be our reality within a few decades, that we're looking at down the barrel of that gun.
I had my eyes opened a couple of years ago when I read Thomas Piketty's book Capital in the 21st Century. It made it absolutely clear that since the 1970s, most of the people in our society have not really gone forward at all, and the vast bulk of what we've done has been sucked up into a tiny proportion of our population. Now, and as somebody who's spent his entire life in a highly capital-intensive business, finance, I can see that happening around me on a day-to-day basis. Is it something? In my opinion, we're at the very beginning of this debate, in that just now somebody has put a proposition on the table and supported it with actual facts and figures. And what we need to do now is to figure out, okay, if that actually is the case, what are we going to do about it? And I think we're a long ways away from really understanding that.
The details that Carl Wiederquist was presenting are really interesting to follow up, but yeah.
Part of what my firm does is all around disruption, and that's what you're talking about. I spoke about the automated vehicles before. That's going to have a huge impact on our economy and a huge impact on our way of life. I had coffee with a partner from a rival firm a couple of weeks ago, and we were actually just debating what would we recommend our children do in the future. Like, it is really difficult. Even in the legal market, we're being disrupted as well. And so people are being disrupted all the way through the economy. So I think we'll have to adapt and morph. But I don't know what the answer is. I think we'll just have to sort of suck it and see at the time and actually plan. I don't really have an answer for that.
We have to do whatever artificial intelligence
And and
services, people oriented, humanities.
All right. Go ahead.
One final thing, one question that we had in the break, somebody asked if we could share the slides. Matt and I are both comfortable with that. We just have to figure out a mechanism and how to do it. So we'll work that out with Joe.
Okay. Well, ladies and gentlemen, you've already heard Frank Stillwell say this is a very complex topic. You know it's complex. It didn't get into all of our minds, but it's terrific. And I'm just glad that we've got two people up here that understand the complexity of this, and they can take time. Please take a moment of your time now to thank them for the presentations. Next week starts a new program, and the topic couldn't be any better than this one right now, and that is that it's all about Putin and Putin's Russia, and what is Australia going to do about it. So I'm looking forward to seeing you again next week. Let's hope it's not as complicated as this one is. That's not a bad thing, by the way. It's not easy.